Good evening and welcome to Business 7. Just how safe are depositors' money in banks in Namibia? That is the focus point of this evening's program, and we will be bringing you insights from the head of the Namibia Deposit Guarantee Authority, the Deputy Director or the Deputy Governor rather of the Bank of Namibia, as well as the CEO of the Bankers Association of Namibia. Please stay tuned.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
Nobody will forget the SME Bank, its demise, and the impact it had on Namibians and the country. In the aftermath of the SME scandal, the Namibia Depositors Guarantee Authority was established to ensure, among others, that something like this will never happen again. Just to bring you in the picture of what the authority actually does, here is the CEO of the Bankers Association of Namibia, Brian Kacherua.
The NDA's slogan, "You deposit, we guarantee," refers to the need to protect depositors. This brings about the simple illustration of the public depositing their well-earned cash into banks and expecting same at some point. There is always the risk of non-payment, as we hear, which is where the NDGA comes in. But to me, this is half the story. There is a bigger ecosystem out there that we really need to appreciate. Deposits fund loans, as we know, which enables banks to play an anchor role in economic growth, employment creation, and the social transformation of Namibia. Thanks to deposits, banks enable businesses, banks employ people, banks facilitate the financing of important personal assets such as homes, pay taxes, enable investments in infrastructure, pay dividends, deliver banking services, enable payment systems, and you can say the list simply just goes on. If loans are not repaid to banks, and banks are not profitable, and of course we can have this debate outside, Honorable Member of Parliament, Natango Ithete, I think we are hearing that we are too profitable and so on, and that's why I'm saying that we can really continue the debate somewhere else. Over time, liquidity risk is increased, which is the largest cause for bank failures. For example, if you look at this recent Silicon Valley incident that happened in the United States of Namibia, where we know that loan defaults actually did cause the demise of that particular bank. Namibia's banking industry, ladies and gentlemen, is ranked third in Africa, third best in Africa after Mauritius and South Africa. This has contributed sustainably to the positive perceptions by foreign investors, thereby inspiring confidence in our country. But we must also pause to realize that not all is well. According to the World Economic Forum Global Competitiveness Report of 2019, Namibia's rankings in terms of the banking sector soundness fell considerably from 7th in 2009 and 2010 to 61st in 2019. This is attributable to the increase in country risk as well as an increase in non-performing loans on the bank's balance sheets. Banking business must therefore be run sustainably based on sound commercial principles, as protecting depositors is of paramount importance and in the interest of financial stability. It is also important to create and promote a culture of savings first and debt repayments, as a failed banking system will lead to economic collapse of Namibia. Furthermore, the sustainability of banking in Namibia must continue to be supported not only by the excellent governance of the industry, but also by an enabling policy environment, an environment that balances all interests, which would enable the deliberate creation of the preferred and sustainable banking future we all want to see. Ladies and gentlemen, the NDGA does not only protect depositors, but we believe at BAN, which is Bankers Association of Namibia, that making regular contributions as we have done to the Deposit Guarantee Fund and seeing this grow also provides a level of protection to banks, as we are ultimately obliged to return deposits should a bank fail. We call it our own self-insurance. There are no recorded global bank failures so far in 2024 that I've come across, but there were some in 2023 in the US, which forced stronger banks to assist failing banks in order to avoid another banking crisis. I need not remind you of the SME Bank. We are still busy with that experience. So even though Namibian banks are well run and well capitalized and profitable, it does not mean that we are too big to fail. And it is indeed from this reality that BON, from whom we applaud, established the NDGA to anticipate that eventuality and provide a level of comfort not just to the depositors, but to the banks themselves.
The Namibia Depositors Guarantee Authority recently launched their annual report, and the head of the authority, Florette Nakusera, spoke about the past year and also the fund's performance. Let's take a look.
We built up momentum during 2023, however, it's also albeit a bit slower compared to the previous year. This growth slowed from 5.3% in 2022 to 4.2% in 2023. Now, if we compare it with a couple of years ago, we will still see that this is robust growth if you look at 4.2% compared to what we have in the earlier years. And therefore, we are saying it built up momentum, albeit at a slower pace. In terms of the banking industry, developments in the banking industry shows that the banking industry remained profitable, liquid, and adequately capitalized in 2023. And this is what is pleasing to note, because as you know, when it comes to financial stability, that needs to happen, and therefore we can give you the assurance that the system is still stable. In terms of the fund performance, our fund was a very small fund when it started out as an authority. Now, between 2023 and 2022, which was the previous year, we have increased to 23.1 million by the end of December 2023, from only a 16.2 million the year before. So the fund is slowly but surely growing, and we are looking forward to aggressively continue to grow this fund. The fund outperformed its benchmark by 66.8 basis points during the reporting year. So the portfolio, we can see that it is growing. We had about 8.52% relative to the benchmark. The benchmark is the South African 3-month Stephanie Index that we have as a benchmark, about an annual report or an annual return of 7.85%. And we can see from this graph that we have actually exceeded the benchmark at 8.52%. And that is pleasing to note. This exceeding in the benchmark is attributed to high interest rate environment, where we then had the fund strategically capitalized on the peak in the interest rates that we have seen, and therefore we benefited from that. Looking at the cumulative historical performance since establishment, since 2020, this is how the fund have performed. The purple line is the benchmark, and the fund, the portfolio outcome is then the golden one. You see that it has been topping since during that time. So more and more it continued to increase. We hope that this is going to be the case going forward as well. In terms of the asset allocation, we have seen that expansion, both in terms of asset class and also as with regards to counterparties that have increased. So we see that in December 2022, we had, for example, the Nedbank floater that we had at 31.2%, we had SA Treasury Bill at 32.5%, and then SAR cash that we had at 36.3%. However, we diversified more, and then in December 2023, we saw a fourth one that was added to it, and therefore we see that expansion. Of course, we benefited from the floating rate, which was more, but it was diversified in terms of the institutions that we were able to spread it from different floaters, from different institutions, and not only one as well. So that has boosted us. We have also boosted adding additional NCDs, and therefore we see that the fund performance was really very well. Now, in terms of the coverage, Section 40 of the Act says that the Minister, on recommendation of the Board, must prescribe the maximum coverage limits for deposits that are guaranteed, such as under the Act. And our coverage limit now is 25,000 per depositor. And therefore, this enables us that the scheme fully covers 91.2% of total depositors in Namibia. So when you look at that table, you will see those results. And I want you to focus from that table on the number of depositors that we see at 1.4 million depositors, 1449703, that are fully covered, and that's that 91.2% I'm talking about. And the number of depositors that have deposits more than 25,000, which is more than the coverage limit, is around 139,570 Namibians. And from them, we are able to cover 8.8% because we covered that 25,000. So that is what we are able to cover as at the moment. But as I indicated, we are continuing to grow.
Also speaking at the release of the annual report of the Namibia Depositors Guarantee Authority was the Deputy Governor of the Bank of Namibia, Epson Wanguta.
Developments in the Namibian banking sector have pointed out that the sector remains, as it has been pointed out already by the two speakers, it has remained profitable, it's liquid, and most importantly, the sector has remained adequately capitalized. The banking sector continued to record a higher profitability levels, coupled with the robust capital levels, much more above the prudential limits. As a collective, we need to reflect on the sustainability of these developments, given the economic environment in which we are operating as an entity. The year under review marked the first year of implementation of our 3-year strategic plan, which is 2023 to 2025. At the launch of our strategic plan last year, I reiterated our commitment to achieving the goals and objectives as outlined in our plan. Ladies and gentlemen, I'm therefore delighted, and thanks to the sustained effort and commitment, the institution have yielded tangible results during this first year of its strategic plan implementation. Alongside the four set key strategic objectives, the execution of the plan will assist in actualizing the NDGA vision and mission. As we move into the second year of implementation, we are rededicating ourselves to the task of ensuring a full implementation of our strategic plan for the remaining period. The assets of the Deposit Guarantee Fund remain safe and prudently managed. Our strategic plan remains focused on our 4 strategic objectives, namely, we want to grow the fund. 2, we want to establish a very seamless process and system. That is very key to the running of any institution. 3, We want to strategically engage our key stakeholders. And finally, which is the fourth one, we want to promote a reputable NDGA brand. That is key. So at the center of all this is the need to aggressively grow the Deposit Guarantee Fund so that we are able to honor our obligation at the time of need or on a rainy day, because that rainy day, you will never know when it comes. We must explore all avenues collectively to ensure that we continuously and aggressively grow the fund. I think we will be working out a plan, reach out to our key stakeholders to ensure that our fund is adequately capitalized. It is important that the vital trust in a financial system by depositors is maintained at all times. Studies have shown time and again that consumers are likely to participate in a system where they know very well that they are protected from the abuse and there are effective safety net in place. And that's exactly what the NDGA is doing. This, in the end, will lead to a higher financial inclusion within a country. Depositors at all times have trust and confidence that their hard-earned savings placed with these financial institutions are safe and they can access it at any time. The Namibian Deposit Guarantee Authority provides that assurance to all the depositors that even in the event of a crisis, of a bank failure, they will be compensated of their deposit in a timely and also in a very transparent manner.
Every day, you make choices that make you legendary. Journey together with us on the path to securing your legacy as a member of the League of Legends. With the Select Platinum Bundle Fee Premium Bank offering, you will access tools that will enable you to thrive. If you earn 850,000 Namibian dollars per annum or more, you can apply for this offering today via bankvinted.com.na for only 447 Namibian dollars per month. Bank Vinted, a member of Capricorn Group.
Take a break from what is happening in Namibia on the local business front. Let's take a look at the business highlights in Africa over the past week as compiled by Reuters.
Here's what's been making the business headlines in sub-Saharan Africa this week. Zimbabwean informal traders are refusing to accept the local dollar, fearing it will be worthless when the government's new gold-backed currency enters circulation at the end of April. The collapsing Zimbabwean dollar is being replaced with the so-called Zimbabwe gold in a bid to bring down inflation. The central bank said it had noted public concerns on the rejection of the Zim dollar by some traders, who are opting to transact in US dollars instead. We Buy Cars debuted on the Johannesburg Stock Exchange on Thursday, the second JSE listing of the year, giving the South African second-hand vehicle trader a market capitalization of 8.3 billion rand, or 441 million US dollars. The company, which has a market share of 10 to 13% in South Africa, is targeting 23% by 2028. Drug maker Moderna has paused its plan to build a vaccine manufacturing facility in Kenya, following a post-pandemic decline in demand for COVID-19 vaccines. The move is a setback for efforts in Africa to cut reliance on vaccine and drug imports from outside the continent. Uganda's presidency said on Thursday that the EU has given Africa's biggest coffee exporter a $43 million grant. That's to help it comply with a new EU policy due to come into force at the end of the year, which bars imports of products whose production resulted from deforestation. And finally, Senegal's new Energy and Mines Minister has said the government will renegotiate oil, gas and mining contracts if necessary once a promised audit is complete. The audit was announced by President Bassirou Diomaye Faye, who defeated the ruling coalition in a landslide election victory last month. Companies involved in the sector include BP and US-listed Cosmo Energy, who are leading the development of Senegal's first LNG project, and Australia's Woodside Energy, which holds 82% of the offshore Sangomar oil and gas field.
Can cooking oil be recycled to produce biodiesel? Well, in Dubai it is done. Reuters compiled this report.
This UAE plant is turning used cooking oil into biofuel. Dubai-based Luta Biofuels hopes its biodiesel will help boost sustainable transportation in one of the world's major oil-producing countries.
We are seeking for a sustainable transportation in the UAE for now, and we are seeking for a mandatory blend similar to what we are having in the whole world.
As the global race for the low-carbon fuel gathers pace, fuel made from vegetable oil and waste cooking oil are expected to play a central role in reducing greenhouse gas emissions in the transportation sector. Luta Biofuels says it collects 500,000 litres of used cooking oil every month and converts it into biodiesel and other products. The company says it produced over 770 tonnes of biofuel in 2023. CEO Yosef bin Said Al Luta explains how it works.
The mix of the biofuel is very easy. It's not a nuclear science. It's actually an oil. We mix it with methanol and potassium hydroxide or sodium hydroxide, either. So this is actually the mix based on how much it has to be based on the free fatty acid percentage of the oil that we can put the mixture.
The UAE seeks to reach net zero emissions by 2050. But in 2023, an independent research group said the country was far off track to meet its climate targets if it went ahead with plans to expand oil and gas production and use. That same year, the UAE government updated its targets, including raising the share of clean energy in the UAE's total energy mix to 30% by 2030. Luta Biofuels is not the first company to turn cooking oil to power vehicles. In remote Australian outback, drivers are using cooking fat to charge their electric vehicles. And in this Californian plant, a plan was in place to turn used cooking oil, soybean oil and beef fat into renewable diesel. Paul Hellier is a professor of sustainable energy engineering at University of College London.
A fuel like a biodiesel from waste cooking oil is a really useful tool for us right now to start reducing our carbon emissions. I think where there are those transport sectors where electric vehicles are going to take longer to be put into use, so like the heavy goods vehicles and aviation, I think we have an opportunity to develop a broader range of renewable fuels and mix those together.
Let me quickly show you something. Don't worry. Next time, I check nice.
Thanks, but it's okay. FNB Insurance checks nicer.
At FNB Insurance, we provide cover for all your valuables, from your phone to your laptop to your car. FNB Insurance. You value it, we cover it. T's and C's apply.
That's it for Business 7 for this week. Thank you for joining us. We'll see you again next week in the studio. Until then, please take care. Goodbye.